Eventually, I'm going to stop counting days. I'm going to just lose track. So I hopefully will stop before I make mistakes and make a fool of myself. I also apologize for the same shirt. It's really just a couple minutes after I recorded the day 2 one. I'm just trying not to have huge, long videos, so I'm just going to break things up a little bit smaller. I want to pick up right where we left off with things that most sponsors in real estate deals do that I think could be done a little bit differently to protect their investors' interest more. This one topic that I want to talk about is the asset management fee. It's a fee that sponsors charge basically for running the deal, for managing the property manager, let's say for overseeing the collecting of the income and paying the expenses, and then getting that money to the investors on a monthly or quarterly or semi-annual basis, whatever it is. It's typically a percentage of the asset value or a percentage of the gross income on the property, let's say 2% of gross income. So it's not a ton of money, but it is something that compensates them for their time. And what I don't like about it is that it technically, according to most investor contracts with the sponsor, it's earned and owed to the sponsor regardless of how the property performs. So in essence, the property could be performing poorly, but it's still bringing in some revenue, some rent from all the tenants, and the asset management fee is earned at that point, even though the investors are not getting the returns that they were, I don't want to say promised, but that the returns that they expected based on what the sponsors told them, what the sponsors showed them. Now, it is true also that a lot of times the sponsors will forego or defer that asset management fee if the investors are not getting the returns that they're supposed to be getting. But generally speaking, that's discretionary on the part of the sponsor. It's not contractual. Most contracts don't say if the investors are not getting their returns, then we don't get our asset management fee. It's usually we get this asset management fee and then you get your returns. And then outside of the contract, it's, well, we obviously want to maintain good relations, so we may or may not take that if you're not getting your returns. I guess in the future videos we'll discuss how we're doing it a little differently in order to more fully align our interests with our investors, or our investors' interests with us, however you want to say it. It's really one and the same as far as I'm concerned. Have an awesome day, and thanks for watching. Bye.